Hey, good afternoon, everyone. It is August 30th. Here we are. The markets are closed. It's been a really interesting week. I want to walk through each of the three grains, and I want to do them on three different time frames. So on the left side of the chart here, you're going to see daily. Here's 240 minutes, and here is a 60-minute time frame. So this is corn, and what you'll see, what should jump up out of you, is this down move here that we've seen at the close of each of the last 2 days. So yesterday we rallied, we tried to get $5, and then right at the end, I mean, they just hammered it. You know, it was all of a sudden down a dime. And then today they really got after it right at 8:30 and sold it down. So who is they? Honestly, it's just traders. It's just market action. I have no idea. It doesn't matter who sells it. What matters is that somebody did sell it, right? So prices are below where we want them to be, and this really looked like it might just go ahead and rally and head up higher. Now, is this super bearish? Well, let's jump in here and look at some different counts and look at exactly what it is that we are dealing with. First thing I want to do is call your attention to 4 days here in August. You have this big reversal on August 2nd. You have a second large reversal on the 11th, one on the 21st, and then one on the 29th. All 4 of these days are outside bar, double close, key reversals, and they all closed near the end of the range. And that was the first one started with a close at 4.99 3/4. So every time we've rallied back above $5 or gotten close to it, this market's been met with heavy selling. And so a lot of you may say, well, wow, that's really bearish because they're just selling it above $5. Who knows who that is, right? Maybe it's elevators, maybe it's farmers, maybe it's hedge fund man. Who knows? It doesn't matter. But the real thing is, I think you look at this and you say, man, they've exhausted an awful lot of selling power, and they don't have anything to show for it because this market has been unable to break lower. And with that type of action, it probably should have. So sometimes it's what you don't see on a chart that's really important. And what you see down here is the divergence that this has created. So these 4 big down days have come in conjunction with large bullish divergences. And I think what that means is that the sellers just can't quite get, they just can't get enough traction and get enough farmers to jump on board and sell it. So if we do break lower, what I would expect to happen is for the MACD to go ahead and turn on down, but to make a shallower low than this low back here and give yet another bullish divergence, kind of like wheat did. We'll get to that here in a second. I think we're flushing out, trying to induce some farmer sells. There's a lot of theory that says that, hey, we're dealing with DP contracts that have to be priced by the end of this week. And so there's a lot of not selling, but a lack of buying because there's no reason to buy it ahead of that. So I don't think that this is necessarily bearish price action, given that the bears can't really break this market over. And given the fact that in the last 10 days, we've seen drastic changes to our national corn crop. Right, the heat has taken its toll. Many of you have called us and told us, hey, fields went from green to dead. Corn finishing way before black layer. We've got same reports in Iowa, Illinois, Missouri, Nebraska, eastern Kansas, all over the Corn Belt. The same story is being told, and yet the market just keeps getting punished. So I don't think that that this action right here should serve to throw in the towel and capitulate and say, hey, I think the bull case is done, because I don't think that that's the case at all. But you can't really ignore the fact that we do have the big bearish reversal. We do have follow through. We are at the bottom end of the range, so we could accelerate to the downside just a little bit, but I don't think it's going to get out of control. In fact, if anything, I think it would end up looking more like wheat. Let's jump to wheat here now. So this is your wheat contract. Here you have a bearish outside day down on Monday, then you have a big down day yesterday, and now today you have a reversal. So it took a lot of selling pressure, just like it did in corn, in order to push this market to a point where it could break these lows. And then the first thing we do is reverse. What does this tell us? Well, it tells us immediately to look for divergence, and that is exactly what that looks like. It's textbook, and this would be a confirmed divergence. So strength today, strength tonight and tomorrow, above today's high at 733, should be bought, and obviously we've got to get back up above these lows right here in order to ignite a rally. And I really think that a rally will get started if we can trade back above this close and this open, which would be about 750 on December Kansas City wheat. If that happens, I think the bears have to be really nervous, and they've got to cover. Now we do have a 3-day weekend coming up, so traders are going to position on Thursday and Friday to get ready for that. I don't really know what that means as far as signals go, but I think that the real action will start next Tuesday whenever whenever that holiday is behind us. But wheat's action looks really good, and it makes me think that the corn action is more of a head fake than a new trend developing. So we want to stay positioned where we are. I don't want to lift hedges yet. If we are able in corn to break back above that 508, 509 level, I think we'll relook at that and look at a more bullish scenario. And helping drive that bullish case really is soybeans. I just don't see anything bearish about beans at all. I don't love today's action because of the bearish engulfing shadow here. I don't like this little activity up here around this gap area. But on the other hand, we're holding up relatively well. We came up, we've come up a long way. We've challenged the highs. Now we're retreating back below it before I think we push on up through it. Beans are super bullish fundamentally if you look at the balance sheet and you assume that it's tightening. I don't know how you can make the argument that it's not, especially with the phone calls that we've been getting and what we have been seeing and hearing from people all over the country, which is the bean yield has dropped. The heat wave took a toll, and we don't know how much it dropped, but it did drop. So why won't it just go straight up? Well, because it's a market. It goes up, it goes down, and it has to ultimately win the day before it can go higher. Now, last thing that I don't like about beans is I don't love that we close below the 1 hour cloud, but we've held the 4 hour and we've held the daily. So that tells you you've got to keep your risk to the long side. You've got to stay in that market and let it work for you. And you got to be willing to give some back here. Remember, you have risk. If you're long this market, you have risk to the downside. If you're short this market, you have risk to the upside. And if you're out this market, you have no opportunity to participate in it. So you have to choose your team and either be long it or you have to be short. And in our system, it's real simple, right? Above the clouds, we're long. We don't love that we're below the hour cloud, but holding these other two with bullish wave counts is enough for us to stay in this thing and say, hey, we want to watch it. If you're really nervous about it, this 1380 to 1375 area. If it breaks below that and enters this cloud here, that would be a good spot to exit. For sure, we want to be short November beans below 1358 is our kind of our line in the sand. Above that, we're happy being long, and certainly above these clouds, we're happy being long. So long story short, don't love the action today, but it's not enough to throw in the towel because there's just too many other things at play, and there's too big of divergences both in corn and wheat for us to say, hey, these things have got to roll over and we're gonna implode these markets. So anything can happen. We'll trade it a day at a time, and we'll take a look at it again tomorrow, and we will keep you posted with videos as necessary. With that, remember, there is a significant risk trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a great night. We'll talk to you tomorrow or Friday.